Hello and welcome, Go Charting Traders. This is 26 March today, and let's see what has happened in Bank Nifty Nifty and what we should expect tomorrow and day after. But before you go through this video, pause this video, go back to yesterday's Bank Nifty video, and check the last 30 seconds to 1 minute. We had went through all the scenarios in that video, so you will still have to rely on that video. All the trade setups are still valid in that video, and we will only be discussing what happened today. In the last 30 seconds of previous video, what we discussed was this specific blue line, right? Specifically, I had mentioned yesterday that if price moves into this zone, there we should avoid this zone completely, and that's what essentially happened today, right? If you want to take any if you want to understand how we came up with this logic, how we removed these levels, and why we were expecting longs above this and shorts below this, and to avoid this area, go and check out the previous video. Now come and let's see what happened today in the morning. Specifically, market opened from this POC, which is the composite POC, and honestly I was taking some longs from here, as I had seen that delta is falling, but its price not moving anywhere, so I was expecting a breakout of this zone and then to actually target the upper end of this zone, right? This is the trade that I was trying to get into from lows from here, but eventually market did not sustain above, and I lost some points in the morning. Then I waited on the sidelines for the market to come back down. As soon as I saw that a huge liquidity pool has been hit below and there was some absorptions, if you could look here, there was a high volume candle here. Specifically, there was sell side delta here, which is clearly seen by this big 2.4k contract number. I think this was the biggest number that came in today, and market completely closed above it. So we saw some absorptions, then we saw some exhaustion from in terms of seller side exhaustion, and then aggression coming into the market, eventually moving the markets up to the value area high of this range. So this is today's value area high, but yesterday this was just a small range, right? But we ended up capturing some points. We ended up also recovering the points that we had lost in the morning, I personally, and then made some slight profit, and then I waited on the sidelines to for the market to break on one side, specifically on the upside. I had also specifically said yesterday that look below and fail setups will work, and do not try to take shots from here. Be cautious with your shots. Go and check out my last video once again. I'm telling you all. I've taken 20 to 25 minutes to tell you my prep process, what I think about before going into the markets, and how I actually am ready for all kinds of scenarios. So when the time comes and when a specific scenario is activated, all I have to do is execute and have a small stop loss and let the market do what it does. And this is exactly what the market did. We had specifically spoken in the last video why to avoid this range, right? And what to expect above or below it for tomorrow, and day after, and this week, or probably next week itself also as well. Go check out yesterday's videos for all trade setups. Today I will just explain you what happened. So in Bank Nifty, you can clearly see that we had two-sided auction, and then excess was created below and at the top, eventually signifying that this is a sideways market anyways. We ended up capturing this long. Now I will only add one single extra setup here that you should be aware of. Tomorrow what we can expect is a slight gap up, and what can happen is that we can have a gap up, eventual break of this failed auctions above, and liquidity hunting above this, and then we might come back into this value area. So early longs might get into FOMO, and then get trapped here, eventually giving us this liquidation, which I will probably trade depending on how much liquidity has been trapped above this range. If it's a big number, then definitely, otherwise I'll still avoid like today. Okay, and then eventually people will start chasing these shots and the look below and fail setup. So similar setup to this, but in the second half of the session, if this happens, then I'll have to wait for like till 10, 10, 10, 20. Take note of these timings. This might be a time when to enter longs, probably, right? Eventually I'll try to enter longs from here again for a eventual breakout of this value area low of this profile, and then something expecting something like this. Okay, so that's the first scenario that I'm expecting, and for that we can actually now add another setup here which says, take longs. Apart from that, nothing has changed. Now another scenario, what could happen is we open flat and the same scenario can go on. We can see some early shots trying to break the market, take the market down, and take over the strength of longs, and try to defend their positions as we move up. If they fail, then eventually we'll get another long move as discussed in the first scenario as well, right? So what, let's see it. Let's say we open flat and we start doing something like this again. Okay, then it's a great sign that, okay, as soon as there is a big red candle below and a pop back up inside, this will be a look below and fail setup, and eventually we can get this setup as well. So this is a scenario when we will open flat. Okay, what's the scenario number three? We may open gap down. Who knows? I'm not expecting it. But if we open gap down, should we take shots? Not at all. If we open gap down, what I would like to see is this POC being held. If this POC is being held, I will definitely take some risky longs from here. Why? Because rule number one of auction market theory says if price enters a value area, in this case a composite value area, it should eventually traverse to the opposite side of the value area, which is the value area low, in this case the composite value area low. But at the same time, there is an exception to this rule number one, specifically rule number four, which says that, okay, if market starts holding at the POC, then then the traversal rule is negated, and we might see eventual breakout of the same level. So what if we have a gap down, something like this starts happening, right? Then I will definitely try longs with small size. Why? Because this gives me a great risk reward, which is in turn with the context. The context being that, okay, if POC is being held of this very strong composite value area, then eventually we'll again move back up, right? And this is the scenario that what I'm expecting. All right. These are the three scenarios for other setups, and how we came about with these levels and why we are thinking in this manner. Every all logic has been explained in the previous video. Go check out the Bank Nifty and Nifty. Both videos are important. Okay. In terms of Nifty, what to expect? Let's see. We have a 3 day balance zone. There was balance here, then there was balance slightly upwards, and then again balance at the same levels. What should we do here? Try to merge the profile and see if we can get a normal distribution, a D-shaped profile. Yes, this is an exact D-shaped profile is what we are seeing. This is the POC. So we'll keep this as it is. We'll close the market profile. And what do we get here? Simple stuff. Once again, all you have to do tomorrow is try to capture longs from this value area low or this POC or the eventual breakout of 22 and 50, right? This is a small scalp, and then above that there is a really good trade from 22 200 to 300. So 100 point bank nifty move, 50 points on the at the money contract. Really great trade. If you can enter from 20 to 150, you will get really great risk reward and positions about it. So I would highly recommend you enter at 20 to 156 and above. Of course, look at the delta. If it's increasing, look at the demand on order flow, whether it's giving continuation. In terms of every candle should have some kind of a continuation delta candle accompanying it in the bottom. Okay, those who don't understand delta or order flow should go check out our videos on how to actually use them in your daily trading to understand the strength and weakness of supply and demand. Okay, both bank nifty and nifty setups which I've spoken in yesterday's videos, all setups are valid. Okay, only one setup that two setups that we've added is are these setups, this and this. Oh yes, one scenario is that we open gap down and do not sustain at the POC, and we eventually break the POC. What happens then we take a pullback towards POC, and if it gets rejected from there, then we attempt this short. Okay, so only short between this zone. This could be a good short opportunity, given that so many longs are swing longs are will get trapped here with an eventual break of this composite value areas POC, signifying that there is weakness in the market. So far so good. Longs are trying to take control of the market. They have succeeded so far. Today has been obviously a sideways day, so we'll see what happens on this ranges expansion. My expectation is we open slightly gap up, then trap the longs, have a liquidation, quick liquidation that will attract a lot of shorts in the market, who would eventually get also trapped below and get defended from this strong composite value area below, and then we will get our eventual normal long move that we expect the market to do tomorrow. Okay. Goodbye, take care, trade safely, keep your size low, or keep your risk in check. If you should have a risk component to your strategy, so you can decide, I will only take, if you have a 1 lakh account, you should only take 3 to 4,000 rupees in terms of SLs every day, and then just close your terminal and go back home, come back fresh tomorrow. Eventually you will end up catching one of the few setups that I've spoken here, right? And those are, any setups out of these will eventually give you good amount of money until you keep your risk in check. So if you put like I personally use 20%, 20 points in bank nifty, and 5 to 10 points in nifty as my stop loss, I will eventually end up spending, let's say, 80 to 100 points, and then beyond that I will stop trading. Okay. I usually have a bigger risk profile, but you can obviously fine tune it to for your own specific risks and own specific capital size. Okay. Personally speaking, anybody below 1 lakh should avoid the markets to once they lose 3 to 4,000 rupees, 3 to 5,000 rupees daily. Okay. Thank you so much. Have a good day.